Stock markets across the world went into a complete turmoil overnight on March 10th. Shares on Wall Street slumped to record one of the worst trading days since 2022. As per Reuters, this sell-off wiped out a whopping $4 trillion from the S&P 500's February peak. Tuesday morning saw even Asian markets nosediving. This because of concerns over a major trade war and economic slowdown in the world's largest economy, which of course is America, due to Trump's tariffs and trade policies, which is now spooking investors. But while many stock markets haven't been doing great in the last few days, what suddenly led them to tumble to this extent, considering that Trump has literally been mooting and imposing tariffs for weeks, if not months now? Well, this is because Trump himself doesn't seem to be ruling out the possibility of a recession now. Responding to a question on whether the US is heading towards a recession, Trump said to Fox News on Sunday that, "I hate to predict things like that. There is a period of transition, because what we're doing is very big. We're bringing wealth back to America, and there are always periods where it takes a little time." This comes days after he said his tariffs would lead to some pain in the short term. As per experts, there are basically three issues that analysts are pointing to amid the renewed talks of recession. One, that Wall Street is perhaps overreacting now since they didn't quite believe Trump would follow through as stringently on his tariff threats. So now that tariffs on Mexico, China and Canada have come into effect, stock markets could be responding to that. There is also broader uncertainty over the back and forth on tariffs that the Trump administration has been doing. Even in fixed income, US bond yields fell after the Trump interview cut investor confidence. This is basically the return a bond investor expects to receive each year over its term to maturity. So lower yields potentially indicate a risk-averse sentiment among investors. So far, the Trump government seems to be willing to tolerate all of this to achieve their broader ambitions, which includes rebalancing of trade. While Trump didn't rule out a recession, his Commerce Secretary Howard Lutnick said clearly that he doesn't expect any recession in America. He said that global tariffs are going to come down because President Trump has threatened reciprocal tariffs. "They say don't charge us 100%, we'll bring ours down. We'll unleash America out to the world, grow our economy in a way we've never grown before. You're going to see, over the next 2 years, the greatest set of growth coming from America. I would never bet on recession. No chance." In an interview with CNBC on Monday, Kevin Hassett, the head of Trump's National Economic Council, also played down concerns over the economy's health. He said that what's going to happen is the first quarter is going to squeak into the positive category, and then the second quarter is going to take off as everybody sees the reality of the tax cuts. Democratic Senator Elizabeth Warren accused Trump of jeopardizing the economy with his policies, saying that we're in real economic trouble thanks to the president, and right now, the stock market is a flashing warning light. Republican Senator Rand Paul also raised alarm about the stock rout, saying that the stock market is composed of millions of people who are simultaneously trading. The market indexes are a distillation of sentiment. When the markets tumble like this in response to tariffs, it pays to listen. But all of the opinions aside, the US may not be able to sustain high tariffs for long, because their economy relies heavily on trade. They also consume more than they produce. And by the time they actually manage to produce more, they'll have a big deficit with a lot of countries. Labor costs in US are also high. So producing as much as a cheaper country may not be so easy for them. Tariffs won't fix these fundamental issues due to which manufacturing jobs in the US are low. Also, while Trump keeps saying that it's foreign countries who have to pay these tariffs, it's really not. It's the American people or companies who end up paying when highly taxed goods come in. And this money goes into the American Treasury. So while it benefits the Treasury, it also sends retail prices soaring. So high tariffs would also mean higher inflation in the US. This could force the US Fed to end its rate-cutting cycle, which is also something that'll basically impact the consumer. Jerome Powell has already said that the central bank will likely keep its benchmark interest rate unchanged in the coming months as it waits for widespread uncertainty stemming from Trump's policies. So this confluence of factors, concerns over Trump's policies, the economic slowdown, waning expectations of US Fed rate cuts, and higher geopolitical uncertainty, are now weighing on markets globally. Hope this video gave you some insight into the global sentiment. For more such news and content, keep watching Mint.